Today we'll be looking at capital appreciation. Capital appreciation is one of our 2022 JSE Stock Picks. The link to that video is in the description. We took hours of research, including listening to various interviews with the management and going through their different businesses to summarize everything you need to know about them in this video. Please consider liking, it really goes a long way. Also make sure you are subscribed to not miss any important stock picks, research, updates, news or interviews and more. So let's get into it. Here's everything you need to know about capital appreciation. The share price is currently R1.85, listed on the JSE, PE ratio of 14, a valuation of 2.4 billion rand, so it is still a small cap, and a dividend yield of 3.65%, so they are actually profitable and paying dividends, even though they are still a small cap. They went public in October 2015 following a SPAC deal, and in 2017 they acquired African Resonance, Dashpay and Synthesis, as well as a stake in Resonance Australia. They are currently operating in 10 countries, so they are geographically diversified. They have 3 divisions, namely services, payments and software. The company has managed to handle the pandemic better than most with their clients in the restaurant and hospitality industries. Their strong financial reserves also assisted the company in this period. Let's look at their companies in their portfolio. First of all, African Resonance. They are amongst the market leaders in the payment providing space. They provide services to some of the leading financial institutions. They also have existing clients in the retail and hospitality industries. Their core business is developing and implementing end-to-end payment system. They offer banking and non-banking product solutions and have a strong existing relationship with Egenico, a leading supplier of payment terminals. The second company is Dashpay. Dashpay provides easy business-to-business payment solutions to the local market. They have a state-of-the-art processing capabilities for point-of-sale systems. Dashpay solutions and service offerings will be formally unveiled during the current financial year. Synthesis, the next business, and this is one we really like. This is the innovative business. They offer software development, consulting and integration solutions to the banking and financial sectors. They have existing client base in South Africa and other emerging markets. They are also an accredited AWS consulting partner and is actively assisting local companies to be cloud ready. And this is a massive market. With everything going digital, they are at the core of this. And the recent demand for cloud-based solutions have assisted them significantly, and their AWS accreditation has helped them to grow that part of the business. They also have Synthesis Labs, which is part of their software business that explores new solutions and products. It allows them to stay ahead of the market by consistently innovating. The market for cloud-based solutions is set to grow about 30% year on year for the next 4 years CAGR. So they are also exploring blockchain solutions, and the labs are also looking into BI units and artificial intelligence. But the fact that they're exploring blockchain solutions and artificial intelligence, which is going to be so big over the next 10 to 20 years, it is such a big part of the future, and that they are wanting to be at the core of that is great to see. So let's look at their clients. Their the blue chip clients include Absa, Old Mutual, Afgri, Investec, African Bank, Capitec, Standard Bank, FNB and Discovery, with retail clients including Woolworth, Shoprite and Pick n Pay. So they have these big clients that will still be here in 10 years time. So it's resilient clients, which is great to see, and these companies will have money to pay capital appreciation to keep their innovation going. So looking at their financial results for the first 6 months of the current financial year. So this is the most recent results. You can also find it on their website, but they performed really well. They saw a 35.7% increase in the revenue, increasing it from 323.7 million rand to 439.4 million rand. EBITDA up 70%, and their operating and trading profits also jumped 84.9% and 67.4% respectively. And their earnings per share also climbed by 67%. So they are just firing on all cylinders. Everything we want to see growing is growing at a rapid pace. They also have a very strong cash reserves standing at 589 million rand. Remember, this is still a small cap, so they have a lot of cash to invest in the business and grow the business. And they've been proud of the dividends that they've been able to provide to shareholders, with dividends increasing 50% year on year. So, overall, the dividends are growing, which is great to see. It's giving back to shareholders. The revenues, all the financials are growing, to put it lightly. And the company is a cash generative company and have really low debt. So they are innovative but work very well with their financials and their cash. And this has proven, because of they innovate in a more conservative manner with spending, this has proven to work really well. The company is expected to continue growth with the increase in demand for digitalization. The international income is up 21% for the 6 months, which is great to see because, we want these local companies to expand globally, especially if you are a shareholder. And they've seen growth there, which is great to see. And the growth in that 21% internationally came mostly from the USA and the rest of Africa. So other highlights for the 6 months is really good to see. First of all, the terminal sales increased around 68% to 210 million rand, and they have more than 259,000 terminals in their hands of the clients, which is also up 28% year on year. Then their new and improved diversified revenue streams that came in. So it's new verticals in logistics and healthcare, in geographics like the Netherlands and Singapore, new revenue streams in intelligent data and management services. Then another news is that the SA cloud market is expected at 22 billion rand in 2023. So there's still a lot of growth just in South Africa and a lot of total addressable market for Capital Appreciation. In 2021, Capital Appreciation also acquired a 26.5% stake in LayUp and formed a partnership with Halo. So LayUp offers clients with a buy now, pay later model, and we all know Square acquiring Afterpay and various transactions and funding, that this buy now, pay later model has a lot of room for growth, and smart money is moving there. So LayUp also offers a pay device that make it easy for in-store use, which is differentiating them from their competitors. Halo also allows Android devices to pay directly through their device, which is almost like Apple Pay. And Nedbank was the first adopters of this product, and they have a huge demand for that specific service from other entities. So there's 3 announced customers, including the Nedbank, obviously, Ukeshe, and RapidPay, with more to follow soon, according to them. So this business has huge potential to expand globally. They also opened new offices in Amsterdam. Let's look at the team, and this team is really one I personally back, and they've proven that they know how to execute. So the team includes Michael Pimstein and Bradley Sachs, which are joint CEOs, and Alan Solomon, the former Bidvest Bank CEO, is Capital Appreciation's CFO. And their board of directors are chaired with former CEOs and execs from companies like Old Mutual, Max Steel, SAB Miller, and Netco, just to name a few. Looking at the risks, we try to cover the risks in these kinds of video, but the only risk we can see is competition, and there's a lot of competition in this entire fintech space globally. But if they keep innovating and being at the core of these big institutions, they will probably be more than fine and see a lot of growth. They have a lot of, there's a big total addressable market for them. Getting into the conclusion. First of all, this is not financial advice. So always do your own due diligence. We just hope to make the research easier for you and summarize things like this. So overall, we like this company, and the reasons include quite a few. Healthy balance sheet, a strong management, a high demand for their service offerings, a large and growing total addressable markets. Clients are, big clients with it's resilient companies that will still be there in 10 years' time. And they also have cash to spend on innovation. And therefore, Capital Appreciation will benefit from that. Capital Appreciation also has strong innovation from especially like synthesis labs, which is still a small route, but there's still a lot of growth in that. And then also, they have the ability to grow geographically, and they have a strong track record of execution. So these are some of the reasons, which are a lot of reasons why we like them. But personally, on my personal portfolio, I'm adding to my position in Capital Appreciation, and I'm going to look to try and make it one of my biggest JSE investments for my bottom drawer. So buying and holding, and just buying when it dips So personally, I like this company. Us as a team, we like this company. So let us know what you think. And if you found value in this video, please consider liking. We have awesome content lined up for you. We are also extremely excited for the new FinMeUp app, which is launching soon. Join the FinMeUp community in the link in the description. Have a great day. Invest safe. Cheers from the FinMeUp team.